Okay, so good afternoon. And today we have the pleasure of having John Teich from Rotary International, who is the Major Gifts Officer at the Rotary. And he has a lot of great information to share for financial advisors and attorneys, real estate people, to help your clients with some tools that can help them with our foundation giving for Rotary. So John, you're in San Diego. You're from Michigan. You went to school in North Carolina. Welcome to Hawaii. And sorry it's so cold and wet where you are. It's 81 degrees here. So take it away.
Yeah, I know. I missed. It was so good to be with you all. Just last month? Goodness, just the end of February to be with everybody, and now to be back again on Zoom is wonderful. Always appreciate the time that you all give me, and appreciate your support of the foundation. And glad to share some information with financial advisors and estate planners about some unique tools and resources that we have with the foundation that helps people achieve their philanthropic goals. So let's get through them a little bit. First, it takes a whole team. Let me see if I can share my screen here. No, we can't let me share my screen. Sorry, I should have asked that. There we go. I need this. So as I said, it takes a team to do this work. And so I'm proud to work with my colleague, Erin Grobel, who's our plan giving officer. And she's the one that I really work with on the ins and outs of some of the complexities of plan giving, including charitable remainder trusts, and donor advised funds and those types of resources. She's a great resource with that. She's happy to talk with anybody. So if people want to reach out, I have her information at the end of this PowerPoint for you to contact her directly in regards to this. And I think first and foremost, when it comes to the Rotary Foundation, it's really important knowing that it's a great investment. We keep getting the top 4 stars from Charity Navigator. 91% of our funds go directly back to what people want to give them to. And as an organization as a whole, we're doing tons of good around the world. We raised over $434 million last year to create an impact around the world, both in local communities in Hawaii and around the globe through polio, through water projects. Rotarians are doing incredible things, and it's a great investment for people for the philanthropy. So if you have people that are interested in making an impact and are Rotarians, or maybe not even Rotarians, it's a great charity for people to get involved in, knowing they can make their impact all around the world and in their local community. And with Rotary, we make an impact in a bunch of ways. We have our 7 areas of focus, which everybody knows. That's a way that people can make an impact, but they also can make an impact through polio as well. And now I want to kind of skip ahead a little bit, and I want to talk through these gift vehicles that I mentioned and talk through those more in depth. So I apologize for skipping some slides here, Naomi, but I want to touch out this slide right here. So when I think of ways that you can assist your clients when it comes to the Rotary Foundation, it's really about helping them achieve their philanthropic goals, but also identifying the best vehicle that might work for them in certain situations. So first, I want to start out with what I consider some outright tax-wise giving options for people to consider. So first and foremost is appreciated securities. You may have clients that have had some stocks for many, many years, are thinking about selling them, but aren't going to be able to afford to pay the capital gains tax on them because they've really appreciated over time. These are great stocks to give to charities and make an impact. And through Rotary, with things like this, they can make major gifts. They can create named endowed funds through our organization, but it's a great way to almost increase your impact by not having to pay the taxes, but also giving to an organization with a resource that benefits them from the tax perspective. And I think that's always a win-win situation when someone can make an impact philanthropically, but also have a benefit to their tax situation as well. Another situation that we have been seeing a lot more is gifts of retirement assets. So people making their RMDs and QCDs directly to the Rotary Foundation. So if people are 70 and a half years or older, they can give up to $100,000 directly from their IRA to a qualified charity, such as the Rotary Foundation. I have been talking to a lot of Rotarians lately that are approaching this age or are already at this age, and this is the way they make their major impact every year, and they do it like clockwork. And there's some great ways to make a major impact through this by creating endowment funds, creating pledges, and all of these things. And one of the new things that came about this year is the ability to transfer these funds into life income agreements. There are some recent legislation that changed that would allow people to transfer up to $50,000 from their IRAs to a life income agreement, such as a charitable remainder trust, and be able to receive the benefits of a charitable remainder trust. So this is a fantastic way for people to use their IRAs to avoid some of the taxes that come with using their RMD, but also making an impact through the Rotary Foundation as well. And now when we talk about estate planning and future giving, people leaving their legacy with Rotary, and we're talking about gifts that are going to be made after they're passing, they're no longer with us, but they still have a wonderful opportunity to make their impact known through the Rotary Foundation. There's really four main ways that people can do this. There's bequests, beneficiary designations, charitable remainder trusts, and donor advised funds. And I'll go into a little bit more detail on each of these on these next couple slides. So one of the most basic ways for people to really get started with giving to the Rotary Foundation is bequests, including us in their will or estate plans. They may already be working with an estate attorney. They may have someone they know, but just including us as a percentage of their assets or a certain dollar amount in their estate allows them to leave a legacy with Rotary and create an impact in an area that means the most to them. It takes a lot of time and considerations, but we're here to work with people to make sure that their impact is felt the way they want it to through the Rotary Foundation. And this is a way that we're seeing a lot of people, and a lot of people aren't letting us know that we're included in their estate plans. And I think that's one thing that we're trying to really work on as well, is having people tell us, because we want to work with you to make sure your dollars go where you want them to go upon your passing, not just to the general fund of Rotary. We want to make sure that you're going and having your impact where they see felt. Another important potential opportunity is through beneficiary designations, leaving us as the beneficiary of a life insurance policy or of retirement assets. One of the main benefits of leaving as Rotary as the beneficiary of your retirement assets is that in transferring retirement assets to your heirs upon your passing can lead them with burdensome tax situations upon that. And so determining that, hey, I'll leave them other assets, but using your retirement assets as a designation for a planned gift is a great way to leave your heirs with some positive, less tax situation, but also making an impact through Rotary. So these are very simple ways if you don't want to get involved with crafting a will, you don't want to have to work with an estate attorney. This is another fantastic way for individuals to leave Rotary in their legacy and utilize an asset that is a little less complex to maybe put together than a will in their situation. Now, this is a charitable remainder trust is one of my favorite ways to really help people in terms of their giving to the Rotary Foundation. I believe that charitable remainder trusts are sometimes some of the greatest win-win giving that we offer through the foundation. This is because with people that have an irrevocable gift of $100,000, which can be funded with cash, securities, or real estate, and this is the piece of the puzzle I think a lot of people need to utilize. Some people have a lot of rental properties or second homes that maybe they're not using as much, and it's burdensome for them to carry it anymore. You can work with Aaron and our planned giving team to create a trust with this real estate property and receive income for the rest of your lifetime. And upon your passing, then leave a legacy with Rotary. It's a fantastic win-win situation in which someone receives income, but also Rotary receives an incredibly generous planned gift, all through using an asset that might have been burdensome to a couple or an individual. It's a fantastic way to be a partner with Rotary, and we're happy to help you work through the process to partner with you. And as a gift of, if the gift is valued at $100,000 or more, we will draft the trust agreement, we will file taxes, we will do the paperwork for you and make it as smooth process as possible. The other fantastic thing about a charitable remainder trust, as Rotarians, everybody enjoys their recognition. Because this is an irrevocable commitment, you also receive major donor and Arch Clump Society recognition. And there's many people that through other giving to vehicles might not be able to achieve Arch Clump Society, but through a gift of real estate, through a charitable remainder trust, they're able to receive one of our top priorities, for top recognition levels for giving. It's a fantastic way, and I really encourage people, if they're interested in that, to reach out to my colleague Aaron or myself, and be happy to start the process with you. Another great way, and some people even don't know about this, is that the Rotary Foundation offers our own donor advised funds. So sometimes individuals have a high tax year and aren't really sure what they want to do with their giving yet. They can create a donor advised fund with Rotary. This is both a legacy gift, as half of the value of the remaining assets upon someone's passing will be transferred to Rotary, but it also becomes a great giving tool for someone each currently to make gifts both to the Rotary Foundation and to other charities that are out there. It kind of becomes a charitable checking account. So it really provides a great tax advantage for you, but also a way for you to give gifts to the Rotary Foundation and to other charities that mean a lot to you. So we offer a lot of different tools and vehicles that can be great for you or your clients. And we really want to make sure that we're helping people figure out what works best for them. We also have some great resources that are available on our website for people to play around with and try to walk through some examples for themselves. So rotary.planmygift.org is a website that I go to myself all the time, and I recommend to almost everyone I work with. There are multiple calculators on here that you can look and say, okay, what if I want to look into a charitable remainder trust and I was to establish it with this amount of money? What would that look like for me? What would my tax benefit look like if I were to make a gift today from appreciated securities? We can look through some of those examples on this website right here and really figure out a way to get a rough estimate of what making a gift to the Rotary Foundation may look like. And another initiative that we've been working on is rotary.org/shareforever. This is our really district-led initiative to try to grow the endowment, because we believe that a strong endowment is critical to making sure that Rotary is continuing to have the impact for generations to come. So this is a wonderful tool to kind of walk through the basics of the endowment, what that looks like, and can educate yourself and clients upon what might the Rotary endowment look like. And also myself and Aaron are happy to talk through that and what that impact can be. I see this as a fantastic partnership because you know your clients, you know what assets may be best for them in terms of making charitable giving. It's my role and Aaron's role with the foundation to make sure that your donors and clients are having the impact through the foundation that they want to have. And so I'll leave you with my contact information here. You have my email at the bottom. Aaron and I are happy to answer any questions, to work with you, to educate you a little bit more in depth about the tools, to educate your clients that are available. And if you have questions about anything, we want to be a partnership on this, because this is us working together. We want to do what's best for your clients and be a helping hand. So know I'm always here to help, always here to be a resource, and happy to have continued conversations about this. So I know that was brief, but I hope I gave a little bit of great information. And Naomi, I'll turn it back over to you. I think you still maybe, there you go.
I'm muted. Okay. Redora or Katie, do you have any questions for John?
Hey, Katie.
Actually, John, that was really good. That's what I was really hoping to get, but it's great that we have your information as a resource. So I'll definitely be in touch and getting some information.
Yeah, totally happy to provide more. Going just to our foundation website, we have on that rotary.planmygift.org, towards the bottom, there's a lot of situational questions as well. And I didn't tell you about that earlier, but it could say, hey, my age is 65 to 70, or I'm planning to make an outright gift of 25,000. And it kind of pulls down some things, as well as a filing cabinet of all the variety of documents and files that we have. And I even find myself using that tool as a Rotary employee because of all the resources that are there. So we have a ton of resources and are here to help and be a partner. Katie, I think you're still on mute.
Yeah, I think that
You're
is
good.
occupational hazard there. No, great information. I wasn't sure if you had talked about the QCD, the Qualified Charitable Distribution, because I joined a little bit late.
Yeah, that's one of my favorite tools that I'm almost having in daily conversations with people. And I was talking with District Governor Randy Hart before I left when I was in Hawaii, and he says, you didn't really mention that much on your tour here. And I was like, I'm trying, but it's not the right situation. That's an incredible tool. And I think that the more we can educate people about that tool and then directing them to their financial person who can help them make that gift, the better will be from the Rotary Foundation, because I think it really allows people to make a larger impact than what they think they might be able to do with other assets, and helps them from that tax benefit as well. Katie, have you had a lot of people that you work with that have been making gifts from QCDs and RMDs?
Yeah, that's part of my profession. I'm a wealth advisor, so I help my clients with options for their financial wellness. And part of it is, they'll come and say, well, I really don't need the required minimum distribution for my daily needs. What can we do? And one of the more popular and easier things is to set up these qualified charitable distributions. And they come to us directly. So that's one of the catches. They can't take the withdrawal themselves. They have to come to us with the charitable information. It has to be a 501c3, right? Designated charity. And then we send the check directly to the charity. And customers, they love it because they don't get a 1099-R. They save on taxes. And they feel good about making that contribution. We had seen a lot go to the food bank, the local food bank from my clients last year. So
yeah, I think it's a wonderful tool, Katie. And I think the way you go about it, having the check come to you and do it that way, I think that's a great way to do it. We have a very simple form that we kind of provide to people about the steps they need to take to make their gift to the foundation, and provide that information as well on our website. But I like that approach because sometimes I've heard of other people that it's just kind of like they fill out something in the system and they have to send it off, and then it gets approved, and we've had some get sent to wrong addresses. So I like that it comes to you and you create that personal approach with sending that off.
yeah, that's part of our service. So yeah. Naomi, did you want me to talk a little bit more about some other?
Yep. Well, John has to leave in 3 minutes.
Okay.
So
I may hop off now so I can eat a sandwich, Naomi. Is that okay?
Yeah, a lot of but John covered all of it, like what I was going to touch upon. So, but I can kind of touch on it as an administrator
Okay.
perspective.
Well, John, you know those donor advised funds? Can you talk a little bit about that?
Yeah, so it's not something that a lot of people know that we offer because so many other financial institutions offer it themselves. We have a lot of people that have their outside donor advised funds, but it's just a tool that we offer to people if they want to set up one with the Rotary Foundation. It's kind of an additional service that we provide to people more than anything. We don't really require that the money comes back to the foundation. However, we'll work with someone if they want to utilize it to make gifts to the foundation from it. But it's really just a tool that we utilize to help people. I'd say they're becoming a little less popular lately. I feel like a few years ago, they were very popular with the foundation when we first came about them, but a lot of people are starting to more transition to the life income agreement opportunities that we offer and the qualified charitable distribution list. But they're a great tool to kind of create a charitable checking account. It's really just a service that we like to offer people, both from creating a legacy through a planned gift through the donor advised fund, but also allowing them to have their own charitable checking account here. It makes an annual gift to the Rotary Foundation every single year. So it kind of checks that box off for somebody to make that gift. And then we have a whole team that are here to help support people. I've seen people that have, I was working with a donor the other week. They had a very high value in their donor advised fund because they don't make as many gifts from it. Have others where it's a little bit lower and they kind of fill it up at the end of every year and then go about the next year and say, okay, that gives me about whatever amount they had in there to make their charitable gifts to all their organizations. So it's really just a service that we offer and are here to partner with people to allow them to kind of utilize it really for the tax benefit of making the gift all at once into it and then making it their charitable checking account to other organizations.
Mm-hmm. Yep, because we have a member that does that, and so he if he likes a global grant or an international project, he'll just tell Rotary, "Can you send this much money to that project?" And then he can participate that way.
Yeah.
But thank you so much, John, and we'll be in touch.
Yes, please, Katie. Thanks so much for hopping on. My contact information is on a slide here, and Naomi, I'll share the PowerPoint with you. Would love to chat. Talk to you a little bit more about it. Happy to talk through how Rotary can work in certain situations. Rodora. Happy to chat as well. I'm happy to be a part of it and help where I can and see what we can be doing to support clients and make sure they're making their philanthropic goals through the foundation.
Thank you.
Awesome. Thanks everybody. See you later.
Bye.
Okay, so Katie, go ahead. This webinar is being recorded so people can refer to this later on. So go ahead.
So no, thanks so much for inviting me. John did a terrific job in explaining the different avenues. And I think maybe I can go over them again. So one thing that we see a lot of people requesting is gifts of appreciated stock. So they will identify a stock or an asset, could be real estate, that they've identified that they want to donate to the charity. The asset shares goes directly to the charity and is sold under the charitable umbrella rather than the individual. So the individual saves on taxes. We also see a lot of people making outright gifts for their favorite charity. Then they work with their tax advisor on regarding how much of that gift is made can be tax deducted. Another quite popular way of giving is with what they call a QCD, which is qualified charitable distribution. This is where you are making a distribution directly from your IRA to your charity of choice, that is a 501c3 directly. So there's a couple of rules that happen with this type of distribution. You must be over 70 and a half years old or older. So it's a check or a distribution that it is directed to the trustee, the IRA trustee. They are then creating a check and paying it directly to the charity of choice. So generally you want to work with your advisor on this particular type of transaction to avoid any mistakes. The benefit of doing this for you as an individual is that this doesn't get counted as a taxable event for you. So there's no 1099-R. But however, you cannot make a charitable deduction because that would be considered double dipping. And there is a maximum per year, so you can only exclude up to $100,000 from your gross income each year. So my best advice would be to talk with your tax professional to build this into your tax planning for the year. Another is that, so with these QCDs, they can't be made, the donation can't be made to a private foundation or a donor advised fund or a supporting organization. So generally the 501c3 is the best opportunity there. We've also seen with individuals where they will look at either existing life insurance policies that they have and adjusting the beneficiary to include their favorite charity of choice. They've also seen clients take out another separate policy just for that particular charitable organization. And it's a way to make your existing gift go and stretch a little bit longer through the leveraging through the life insurance. The life insurance portion that is donated to the charity, it doesn't get taxed at income tax level and it doesn't get taxed from the state tax level. So 100% of the proceeds will go to the charitable organization. The other option, of course, is just writing in the charity into your estate plan through your estate plan attorney. They're going to then write in, it could be a specific request of a dollar amount. It could be shares of stock, or it could be real estate, whatever asset it is that you're looking at. I do recommend you speak with your tax advisor and your estate planning attorney to make sure that you're maximizing the best for your individual situation, because everyone's going to be different in terms of what is the best for them. Through the charitable giving and writing into your estate, you have charitable remainder trust and charitable lead trust. And these are becoming a little bit more popular recently. So the charitable remainder trust is where the asset and it could be appreciated assets, are put into a separate trust where throughout the life of or the terms of the trust, the income is paid to you as the grantor or family or heirs, whatever the terms of that trust are, for that period. Once those terms have been met, the remaining asset is then donated to the charity. So charitable lead trust is kind of a mirror image of that, where the charity is the lead organization or the lead entity that's receiving the income off of the asset. And then after a certain number of years, that particular asset goes then back to the estate or goes on to your heirs. And then probably some of the other easier things to do to include charity into your estate plan is just to simply change beneficiaries on your IRAs, your life insurance policies. Very easy to write in. And John had also mentioned that lifetime income agreement as well, where you can take a lump sum of about $50,000 directly out of your IRA to then put it into a donor advised fund. So that's something that's new for this year. Again, I would caution that as of today, this is March 22nd of 2023, just check and make sure that you're reaching out to your professionals, team members that you're working with, to understand what the rules are at the time that you're discussing, because things will tend to change. So, but those are some of the ideas that we are currently using and talking with customers about with making charitable donations for their estate plan. Naomi, did you have any questions? Oh, you're on mute.
We should have a sign, you're on mute.
I do it all the time.
No questions.
Go ahead, Rodora.
Yeah, no questions. I mean, this is a very good, just a good recap for me on what is out there. It is kind of confusing.
Mm-hmm. Yeah, it's good to have partners too, and you can work with your CPAs or your tax preparers. They generally have good ideas. Your estate planning attorney, they're the specialists, right? In the attorney world, we'll see customers that may not necessarily seek out an estate planning attorney to help draft their documents, but it's always good to have that specialist. And the other is, I just thought about it, part of the service that we offer here through my employer is that we will have our trust department review the client's trust in terms of an administrative view to see, are the attorney's language that they're using, is it legible, understandable? Are there any questions? Because that's one of the things that happens after someone passes. It's a binding document. You can't make any changes. But while they're alive, you can get input from an administrative point of view to then have the opportunity to make some changes. And having your estate planning documents reviewed, every 3 to 5 years is also good practice, because there are changes written into the tax laws. But, check with your financial professional, see if they have someone that they can help to review documents for them, or maybe it's the estate planning attorney that you can ask them to help to review. But generally, trust companies, they tend to look at it in a different way than the writer.
That's a good point. Thank you.
Good reminders, because so many times you do your trust in your documents, you don't update it, and then it's too late when somebody passes and you found out that you only had one person on the accounts, or the trust is naming somebody didn't want to get the money.
Yeah.
So it's really important for people to review from time to time and
It
work with your
is.
professionals.
And
Mhm.
I think too, another tip that I've learned along the way is that if there is a special bequest that you are making that you may think that your other heirs might attest to later, it's always good to have a letter written from you that you can attach to your documents to say, these are my wishes and this is why. So that the remaining heirs, the beneficiaries, if they're siblings or family members, they know that it was clear direction from the grantor, and it minimizes the fighting and it can maintain those longer term relationships. I've seen too many families get kind of separated because they didn't understand why certain thing happened. And they think that there was some coercion or some, not such good things there, but that's another suggestion that's good. And always make sure your documents are somewhere that someone knows, whether, all of my updated documents are with my attorney or all of my updated documents are in a safety deposit box, but make sure that trusted person, either it's a successor trustee, they're also either on the box or your box is in title of your trust. Because then the trustee
Oh,
can access
yeah,
from there.
that's true.
Mhm.
Today, our club made a donation at a school, and what happened was this member did exactly that. The RMD was donated to a 501c3 with the stipulation that that money would go for these projects at the schools. So we went to Fern Elementary School, gave them a check for $4,000 because she said she wanted that money to go to school. So here's one way you can get rid of that RMD, not pay the taxes, and then you can use it for a project that you specify. And so that's what Rotary can do as well.
Oh, that's great.
Yeah, it was pretty cool. Okay, so thank you very much. Katie from First Hawaiian Bank, you have some excellent people in investments, but also in estate planning to help the clients. So thank you very much for helping us with that part.
Oh,
Um,
welcome.
and Redora is a investment advisor as well. So Redora, you have any stories you want to give us on how you're helping your clients?
Oh, hi, Katie. This is Redora Pagai. I'm with Ameriprise Financial. Actually, it's something that, over 23 years, we talk to clients and, and there's always some new things happening. But recently I shared with Naomi that I went to a seminar to actually really meet another attorney, estate planning attorney, because there's not so many here that we can refer to. So it's always nice to have a few. And it just happened to be at the Salvation Army, their presentation, and I was just very impressed with the way that they put on this, this show and the information they're giving. And I thought, we should be doing that to our members. I mean, not necessarily me, obviously, but have an attorney and and I guess a gifting type of Rotary person that can talk to our members about it, because I think we're kind of missing the opportunity here. But yeah, I've had a few clients, and we don't necessarily do a lot of the trust side, but we always refer to for them to review their trust, their wills, and we have some very old trust out there, 1985 or 1971, and all of a sudden they're like, well, you know what, this person has passed on. So definitely always telling clients to update their trust. But yeah.
Yeah, so I think what we can do is try and organize a seminar for members who are interested in learning about this, and even if they have some documents, is a good refresher. Okay, so I'm going to stop recording now, if that's okay.